Hello traders, welcome back to Nova channel. And let's continue a very important topic today. Have you ever entered a buy trade during a strong price rally, only for the price to reverse shortly after and hit your stop loss? That's an extremely frustrating feeling, isn't it? The reason might be that you missed a crucial signal. The market was exhausted. Today, we're going to explore a powerful tool that helps you recognize this, the Relative Strength Index indicator. In this video, we will learn what RSI is, how to read its signals, and most importantly, how a scalper can use RSIs more effectively. And now let's get started for the first part. What exactly is the Relative Strength Index? In simple terms, RSI is a momentum oscillator that measures the speed and chain of price movements. It helps us understand the current market strength, whether buyers or sellers are dominating. RSI oscillates on a scale from 0 to 100. This level tells us about the strength of the trend. For example, a high RSI, which means above 70 level, indicates a very strong upward momentum. Buyers are dominating. On the other hand, a low RSI, which is below 30, indicates a very strong downward momentum. Sellers are dominating. And always remember that RSI is a momentum measuring tool, not a tool for absolute price forecasting. And now we will dive into two basic but crucial RSI signals that every scalper needs to know. The first part, overbought and oversold zone. Regarding to overbought zone, this is when the RSI moves above the 70 mark. Many new traders mistakenly think an RSI above 70 means sell now. This is a big mistake. An RSI above 70 simply indicates that buying pressure is very strong and might have reached its peak. On the other side, oversold zone. This is when RSI falls below the 30 marks. This is when the RSI falls below the 30 mark. Similarly, an RSI below 30 doesn't mean buy now. It only suggests that selling pressure is very strong and the market might be due for a pause. So, what's the correct way to use it? Instead of trading as soon as the RSI hits this level, let's wait for the RSI to turn back from these zones. For example, when the RSI moves from 75 back below 70, that's a stronger signal that buyers are exhausted and a bearish reversal might be imminent. And now we will move to the next part, divergence. This is one of the strongest signals from RSI. Divergence occurs when price and RSI moves in the opposite directions. There are two main types of divergence. Bearish divergence, when price makes a higher high, but RSI makes lower high. This is a strong warning that uptrend is losing momentum and a bearish reversal might be coming. And opposite, bullish divergence, when price makes a lower low, but the RSI makes a higher low. This is a strong warning that the downtrend is losing momentum and a bullish reversal might be coming. Besides the overbought and oversold zones, the 50 level on RSI also holds immense significance, especially for scalpers who trade with the trend. Consider the 50 level as dividing the line between buyers and sellers. And there are two scenarios we need to pay attention to right now. And the first scenario is, if the RSI is oscillating above 50, this indicates that buyers are in control of the market and the trend is bullish. When the RSI pulls back but stays above 50, that's a strong signal that the correction is over and the uptrend is likely to continue. And the next scenario we have is, if the RSI is oscillating below 50, this indicates that sellers are in control and the trend is bearish. When the RSI rallies but stays below 50, that's a strong signal that the correction is over and the downtrend is likely to continue. Using the 50 level helps you confirm the trend quickly with more confidence, preventing you from entering trades against the trend. And now I will advise you how to use effectively RSI. A professional scalper would never use RSI on its own. They always combine it with other analysis methods to get high-quality signal. The first advice for you is, let's use the RSI to confirm the trend. Reach the 50 level on the RSI as a dividing line. In an uptrend, the RSI will consistently stay above 50 and vice versa. A RSI crossing the 50 level can signal that buyers or sellers are regaining control. And next, let's combine with price action. This is the most powerful approach. Wait for a clear price action setup, such as a shooting star candle as a resistance zone. Then check the RSI. If the RSI is in the overbought zone and starting to turn down, that's a perfect combination. And lastly, adjusting settings for scalping. The default RSI setting is usually 14 period. For scalping, you can try adjusting to settle down to 7 or 9 to make the RSI more responsive to short-term price changes. In conclusion, RSI is a powerful tool for measuring market momentum, identifying overbought and oversold zones, and especially for spotting divergent signals. However, remember the golden rule. Never trade based on RSI alone. My final advice for today's lesson is open your charts, set up the RSI indicator, and look for the signals we just learned. Practice will help you train the eye of a professional scalper and get closer to success. I wish you success on your trading journey. See you in the next video.